What's up, everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we did see a pullback across the board in the indices, and the question is now, will it all just be another bear trap? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so first we're gonna have a little fun just because I feel like it, and we're going to take a look at some of the things I predicted in the market, and I'm going to explain to you why market psychology is so important. So the first thing I said is that Google will beat their earnings report, SPY and the triple Qs will invalidate the bear count for a fifth wave lower, everybody becomes bullish, and then the market will pull back to trap the bulls and then create a new bear trap. I said this on February 1st, and here we are on February 3rd. We got the bull trap yesterday, we invalidated the bear count, and right now we're pulling back. So I still do believe this is all just going to be a bear trap. So I'm going to explain to you exactly what I'm talking about with today's price action when we get into the technicals. And then next, yesterday I said it was time for the market to cool down, and a lot of you thought that I was just looking at Facebook's earnings report and was seeing that the market was pulling back in after hours, and that's why I was expecting a pullback. The only problem with that is that I posted this in the Discord at 3:50 p.m. 10 minutes before the market closed, and I said that our rocket hit its target and ran out of fuel. I would start to get more cautious as risk for a pullback and cooldown period is now a lot higher over the next 3 to 5 days. Also keep in mind the bullish breakouts are SPY greater than 457, the triple Qs greater than 370, and the VIX below 20. We can start favoring a buy the dip market once we see a couple of days of bullish price action and break the downtrends. You can also see in the picture that we just overshot my price target by just a little bit before we started to pull back. So yes, you can use technical analysis to predict the market, and you don't need to always just read the news and follow along with whatever narrative is currently out there. If Facebook earnings was the only reason the market pulled back today, then why was I able to predict that the market was getting ready to cool down and needed to pull back 10 minutes before the market closed, and we even saw what Facebook's earnings were going to be? So the main reason I'm going over this is, one, I just felt like having some fun, but the other is because technical analysis does work, especially when you combine it with market psychology and you try to understand how the market tries to hurt the most people. The unfortunate truth about the market is that it wants to hurt the most people, and it doesn't just try to hurt bears, and it doesn't just try to hurt bulls. If the majority of people are getting bullish, it's going to try to hurt the bulls, and if the majority of the people are getting bearish, it's going to try to hurt the bears. So yes, I do think this is going to be a bear trap, and I do think we're in for a very strong face-ripping rally that could be just around the corner. Alright, we had enough fun for one day. Let's jump into a chart of the S&P 500, and we can see SPY was down 2.35% today, and we're coming right down into the support zone right around 445. Now the first thing you need to pay attention to is that we are still in a downtrend, and we have not yet broken out, and we still need price action breaking and closing above SPY 457 to get the bullish breakout. So yes, price action is below all the moving averages, and we are still in a downtrend, but don't forget about the possibility that this is going to be a bear trap. So in the bear trap scenario, we went over this just last night. This is our bullish impulse, and we're trying to form another higher low, and the higher low scenario should be able to stay above SPY 440. It doesn't mean it has to, and we could come all the way down to 428, but that would be a very deep retracement, and that would also be a very strong bear trap. I don't think we are going below 428, and if we do go below 428, we're more than likely not getting the bearish scenario that I favor, and we're more than likely going to break down below 420 and see ourselves going into a bear market. However, the scenario I do favor is that the SPY will close above 440, we'll get a bounce off of support, and we will get a breakout, and we will break back above this high at 457, and we will start running towards the previous all-time high to test that level as resistance. So yes, this is going to be a face ripper, and it could be just around the corner. I drew this same exact pattern last night, and you're starting to see it playing out, even though I don't know where this bottom is going to be because we need to see a pivot off of one of these support levels. I can tell you that once we start to bounce and you see price action starting to break out above resistance, you will want to have a very strong bullish bias no matter what you think is going to happen in the market. In the intro, I talked about how the market likes to create max pain, and I talked about how I predicted this bear trap right after the bull trap the day before. And yes, this stuff does come into play because the market is trying to hurt the most people possible. Remember that the majority of people are looking in the rear view mirror and they are seeing this monster sell-off, and they're expecting this to happen again. And that's a human emotion called recency bias, where they had a very bad time during that whole way down, and they never want to experience that horrible trip ever again, so they are never going to trust another rally coming from here. So what do you think the market's going to do to make those people not want to join in on the next rally? It's going to start giving them the same exact fear that they had back then and show them a giant red candle after a very impulsive bull rally so that they're thinking, oh my gosh, this is it. We're going all the way back down to SPY levels of $0. It's time to sell everything and move out. Obviously, that's just emotions talking, and we have no reason to believe that's true. And yes, we still do have to respect the downtrend. But what I'm trying to tell you is if you start to see a bounce off support and you start to see an impulsive rally, and we do get that breakout above SPY 457, you instantly need to remember what I told you, and you need to forget about everything that happened in the rearview mirror, and you need to start looking at the possibility we are going to run up and retest that previous all-time high. There's no way to know for sure that I'm right, and there's no way to know for sure that this has to happen. So yes, you still need to follow the price action, which I tell you each and every day that price action is king, and you need to follow the price action. So if we start slicing through 440 like it's not even there, then get a lot more cautious because I was more than likely wrong. And we are going to see SPY coming back down to 428 to retest that level as support. Now the bullish breakouts are going to be back above 450 and then back above 457. And then back above 457, we should go all the way back up there to at least retest 472. Also note that we went down today on low volume, so we don't see high volume selling. And everybody already sold that wanted to sell, so I really don't even know who's left to sell at this point. So that's another reason to believe that the stock market needs to go higher because there's a lot of cash on the sidelines and there is a ton of bearish sentiment out there. I go over the bearish sentiment on my weekend video, so if you haven't seen how everybody is bearish, you might want to go back and check that Sunday video, and I do give a lot of strong points on why the market is likely going to rally over the next couple of months. So that's enough about that, so watch these levels and watch the price action. And yes, respect the fact that we're in a downtrend, but we're very close to breaking the downtrend in the very near future. And I'm just trying to warn you to not ignore that bullish breakout. On the NASDAQ 100 triple Qs, we were down over 4% today, and we came right back down to this support level right around 352, and that level did hold up as support. So just like I said with SPY, this is more than likely going to be a bear trap, and you can clearly see to the upside we did open a gap, and that gap doesn't fill until we see the triple Qs getting back up to 364, and we know that gaps get filled. It's not a matter of if, it's just a matter of when. Now, if we start to break out above that gap and we start breaking out above about 370, that is your bullish confirmation that we're about to get that face ripper, and that could mean the triple Qs are coming all the way back up to about $400. On the way there, we'll have resistance right around 375 and 377, and then again right around 388 to 389. Now, I'm wrong about all of this if we see the triple Qs slicing down through 352 and 350, and that means we're coming back down to retest the lows at 340, and then we're more than likely going into a bear market if we break down below 340 and start closing below 334. So remember, I'm not telling you that we have to go into a bull market from here because yes, we are in a downtrend. I'm giving you my opinion on what I think is going to happen from here. And my opinion is that this is a bear trap. It's going to make everybody scared because of what just happened in the rearview mirror. And then it's going to start going on a face ripping rally to new highs. On the Dow Jones, we were down 1.42% today and we closed right on top of that support level right around 350. And we are seeing a very similar story where we're getting rejected from resistance and we're starting to put in together that bear trap. Look for support levels at 350, 347, and the support trend line right around 344. And if at any point we start breaking and closing down below 340, get a lot more cautious because we're more than likely going to see the bear scenario. The bullish breakout levels are back above 356 and then back above 360. And yes, we still do have a gap to close at that level. Above 360, you're looking for a retest of the all-time highs at 365 and 368. On the Russell 2000, we were down 1.89% today, closing right on top of support at 197. Remember, we need to see the Russell 2000 staying above 191, or we're likely going down towards 170 with 183 as support on the way there. To the upside, we need bullish breakouts back above 205, and then back above 212, and then 218. Back above 218 will be looking a lot more bullish, but again, this is a bear market and a very strong downtrend, so don't be getting bullish unless you're setting your risk at one of these support levels and you're willing to take a loss if you're wrong. On the Arkk ETF, we were down 5.61%, closing that gap at $69, and so far that level is holding up as support. There's still the possibility because we're in such a strong bear market and such a strong downtrend that we're coming back down to 65 or possibly even 60. Your bullish breakout levels are back above 82 and then back above 85 and 91, and don't get overly bullish unless you're setting your risk and willing to take a loss if you end up being wrong. On the VIX, we were up over 10% today, and we see the VIX did close back above 24, so we're starting to see that bear trap scenario playing out. If the VIX continues to spike from here and gets back above 27, then it's more than likely not a bear trap and we could be going into a full-blown bear market. But if you see the VIX getting crushed back down below 24 and then closing below 20, you are more than likely going to see a bull rally, and yes, it could be right around the corner. On Bitcoin, we're pretty flat on the day, and you can see that we did get rejected at 39,000, so we're still holding down below that resistance trendline, which increases the probability we're coming back down to support at 35,000 and then 30,000. Below 30,000, we're going to 20,000, and your bullish breakouts are back above 41,000 and then back above 46,000. On NVIDIA stock, we were down over 5% today, and we see NVIDIA coming back down to support right around 236, and we still have a gap to fill at 229. If we break down below that gap, you're looking for previous support right around 219 and 209, and below 209, I do think the bottom in this stock will either be 197 or 192. Your bullish breakout levels are back above 254 and then back above 271. And if we can break out back above the 270s, we will see NVIDIA stock going back into a bull market. And we do have earnings right around the corner in a couple of weeks. On Tesla stock, we were down 1.6% today, getting rejected from that resistance area right around 935 and closing back down below 900. Remember, we still do have a gap down here right around 859, and we still do have strong support at 842 and right around 825. And if at any point we see Tesla closing down below about 815, it's more than likely going into a bear market. We have the full bear trend, and price action is looking very weak, and we're clearly in a downtrend. So don't get bullish unless price action can break back above 940 and then back above 1,000. On Apple stock, we were down 1.67% today, and we're still looking bullish with the full bull trend and the price action above all the moving average, and we're still staying above support at 172. Remember, we need to be bullish on Apple as long as it's above 168, and if it breaks below 168, it's more than likely coming back down to 162 and 157. That will make Apple lose the bull trend, and we could keep going lower with the next support level at 153. But with the bullish price action and the bullish trend, I have my eyes pointed higher with the next breakout level back above 176, a retest of the previous all-time high at 182, and a brand new all-time high price target at 188. The financial sector was down 1.1% today, retesting the 50 EMA as support, and it does still have a gap to fill at $41. The industrials were down 1.59% today, back to the support trendline, still below the 50 EMA, still in a bear trend, but we still do have a gap to fill above. On the healthcare sector, we were down 0.43% today, getting rejected below the 50 EMA, but we still do have a gap way up there to fill at 141. The energy sector was down 0.95% today, failing to break out, but still looking bullish with both price action and trend. So jumping back over the S&P 500, don't rule out the possibility that this is all going to be a bear trap, and we're going to find support, turn the corner, and start going on a very impulsive face-ripping rally. Don't just assume it has to happen, and I'm not trying to tell you that it's guaranteed to happen. Watch the price action and just have it as a scenario that's very likely. There is a lot of bearish sentiment, and the market will want to punish that, and it's going to do it in the quickest way possible, which does mean the rally is more than likely going to be impulsive and not just a slow rally higher where it's going to be very predictable. So keep in mind everything I told you and take it into account. And as always, stay objective and always follow the trend. So you still need to be cautious as long as we're in a downtrend. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. Bank does well in any market conditions, especially bear markets like 2008 when everybody was losing money. Bank beat the market that year and made over 90%. If you're interested in learning more about Bank Trade Alerts or how to subscribe, you can find out more information by clicking on the link in the description. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.